I'd like to welcome everyone to the Zimnat trade finance and credit insurance. I believe this is one of its kind, or at least this is the first one I've been invited to. But we hope that Zimnat will be holding this on a regular basis going forward. I will be introducing some of the speakers as we go along. But Mr. Mazoro just said that no one is to introduce me, so I'll introduce myself. My name is Simon Chikumbu. I am chairman of Aon Benfield in South Africa, which is a reinsurance broking unit. I started my career here in Zimbabwe in insurance. I've been reinsurance for 34 years, a short 34 years, 10 years with Munich Re, and 24 years with Aon. So I know some of for the older chaps who are here, I would know them, the younger ones perhaps not. I was invited to come and be a facilitator at this conference, so I'm looking forward to a very good engagement with everyone. What we'd like to do is to make it as interactive as possible. So after the presentation has been done, we'll have a panel discussion. The panel will have the first input. Then I'll open the floor to the rest of the delegates who are here for you to make comment or to ask any questions you may have. Before I call upon Stanley to open the conference on behalf of Zimnat.
Good morning, ladies and gentlemen. It gives me great pleasure to welcome you all to the Zimnat Trade Credit Insurance Conference with the theme Embracing Innovative Trade Insurance Solutions that promotes and supports growth in trade finance for a resilient future. And this is coming at an appropriate time in Zimbabwe. I'm sure you all know Zimbabwe is now open for business. I would like to acknowledge the presence of our valued clients, our Acting Commissioner of Insurance and Pensions Commission, Mr. B. Kazengura. I'm not sure whether he's arrived, is it? Our sponsors, Bank ABC, Continental Re, and Grand Re. Our keynote speakers, presenters, and a panel of experts. Zimnat management team and staff who have worked hard to put all this together. May I take this opportunity to introduce our newest division, Zimnat, your diversified financial services and insurance group associated with Sanlam, the largest insurer on the continent, now offers a wide range of trade credit insurance, surety bonds, and guarantees. Zimnat, in response to a positive market outlook in the coming year, saw it fit to open a specialized, standalone, fully fledged trade credit insurance, surety bonds, and guarantees division. This conference, therefore, is part of the launch initiative of this division, and I'm very excited about this development. The main objectives of this conference, basically there are three: to demystify the trade credit insurance model and ensure that it is fully understood in order to boost its prospects for adoption by trade finance entities as well as corporates, and ensure that trade finance is conducted securely. The second objective is to highlight the immense investment climate in Zimbabwe, which is on a positive and encouraging trajectory, and also to highlight the critical role that Zimnat Trade Finance is expected to play to enable success in the economy. And the last objective is to encourage synergies between stakeholders involved in trade finance and credit for the promotion of Zimbabwe's local, regional, and international trade. In closing, ladies and gentlemen, having said this, we hope that this will be the start of many productive conversations and a platform for continued business. Enjoy, and I thank you.
I said earlier, myself, I'm from South Africa. I've lived in South Africa for close to 20 years now. Before, I'm not an expert in trade credit insurance, but I did a bit of research through our own organization, and I thought I should just give you one or two things what the market is like in South Africa. As you all know, the economy and the trade credit insurance are very close correlation. So what we've seen, South Africa is going through a fairly difficult time Following the Zuma era, the economy was down. Growth was 0.6% in 2016, 1.7% GDP growth, that is. 1.7% growth in 2017. And with that, that created quite a risky environment in terms of trade credit. So you find that one company folded. There used to be 10 insurers doing trade credit. They're down to 8, I think. And a few policies have been cancelled mid-term because the claims ratio in South Africa has been increasing and the clients were not able to absorb increase in premium. So it's been quite a downward cycle. Big organizations, some of which you know, like Edcon, which is Edgar's here, they're on the brink. People like Avenge, which is a construction company, Bezel Reed, Max Steel, very international groups, ArcelorMittal, they are struggling. And in South Africa, the market is quite depressed. But of course, with Cyril Ramaphosa coming onto the scene, there is a hope that investors will come in again and things will pick up. But it looks like Cyril is having a bit of a challenge on what Zimbabweans have done already, that is expropriation without compensation. So that will be a challenge for them there. There is a Wi-Fi here, so the Wi-Fi name is Sango Wi-Fi. The password is Sango 2020. Sango 2020, one word, if you want to log on to Wi-Fi. Obviously, we would like you to pay attention to the presentations. Now, without further ado, I would like to introduce our keynote speaker. The regulator is not here, so we'll introduce the regulator when he comes, and then after, whenever he comes, we'll give him a space to speak, but otherwise we should start now. The first speaker is Mr. Lawrence Nazare. I've known Lawrence for a very long time. Lawrence started his career after graduating with LLB from University of Zimbabwe, admitted lawyer. He worked for Zimnat for a very long, not Zimnat, sorry, for Zimbri for quite a long time. Then he went to what was then Hollandia, changed the name into Intermarket. He had a stint at TriStar. He was chairman at Trade Credit Insurance. He was a ZB Reinsurance as MD. And I think it's 2011, I think, he moved on to Continental Re as executive director, where he still is. He's based in Lagos. We meet him everywhere. We do conferences, so he's a good friend of ours. And we are grateful that Lawrence could come and share the day with us. Mr. Nazare, please come through.
Yes, good morning, everybody. Good morning. Yeah, thank you very much for that. Right, I think the commissioner or the acting commissioner is not here, and Simon, I don't think there's any reason for protocol if it's only you sitting at the top table, who is there? Right, I was asked to make a keynote address on trade credit for this conference, for the deliberations, and I will not delve into the technicalities or the detail. I think we've got more qualified people in the room today who are going to take us through that. But I will just speak on the theme of trade credit insurance. There is a college in the United States of America called Claremont McKenna College. It's based in California. Its curriculum focuses on economics, finance, international relations, government, and public affairs. The Claremont McKenna College motto, and I think I will try to do the best that I can from my college days, from my law studies. It's in Latin. And those who are students of Latin, I think we see older folks here, they may correct me later if they can possibly do so. Crescit cum commercio civitas is the theme. And it basically means civilization prospers with commerce. I think it's apt to start on that note for the theme of this day. Trade is the engine of the global economy. I think all of us will accept that. It allows companies to grow, compete. It allows them to improve products, and trade creates jobs, investments, and generally increases income levels and reduces poverty. And I think for Africa, the key theme would be reduction of poverty. The capitalist ethos is really underlined by trade and commerce. It has been said that there are very few propositions upon which economists have a consensus more than the theme that, open world trade increases economic growth and raises living standards across the board. Trade ultimately facilitates the exit of poor economies from the poverty trap. And I think it's critical at this point in time for us to be emphasizing that as Zimbabwe, that for us to exit the poverty trap, Zimbabwe must start trading again. Unfortunately, trading is fraught with risk, and management of that risk is the focal area of our discussions and deliberations today. As traders, I think business people, we do have a few here, appreciate that there's daily concern about whether shipped goods will arrive safely, whether those goods will be paid for, whether the buyer is going to be reliable, whether they will be paid without problems, and how they can enter into new markets. I think these are all concerns of all traders and business people. And on average, and it's primarily because we are focusing on trade credit here that I'm mentioning this. On average, money is outstanding, which is receivables, constitute in excess of 30% of balance sheets of all trading companies globally. It is a lot higher in certain markets, and I think those of us in the insurance space will know the extent to which you must grapple with receivables in your day-to-day operations and the amount of time that you must spend in terms of management time committing to collections. Trade credit insurance is a risk transfer mechanism that is really designed to assist traders in addressing the concerns that I've just highlighted, but more specifically the concern of trade receivables. And it is insurance protection for trade receivables, or in certain instances, contractual obligations that have not been met. Although it is an insurance product, trade credit is much more than that. I think it is a key financial instrument for exporters and sellers to manage credit risk. Banks are willing to risk a lot more capital. They're willing to lend a lot more if the risk of receivables has been mitigated by a trade insurance product. Because you do have a fairly significant enhancement of a company's credit quality, or the credit quality of a company's receivables if you have a credit insurance policy. Therefore, we could say that trade credit is a proxy for financial guarantees that enable trading companies to gain access to bank lending and also optimize their capital needs, their working capital needs, that is. It is an important financial tool, and maybe to contextualize, I think, today's theme of reestablishing trade credit insurance as a viable and vibrant sector in the Zimbabwean insurance space, I will recall some personal experiences. I must highlight that this is public knowledge. I'm not violating any, fiduciary responsibilities for my prior engagement, or arising out of my prior engagements. I think some of you would know that at one point in my working life, I was appointed to the board of CredSure, which is short for Credit Insurance Company Zimbabwe. I was appointed onto that board in 2002. Zimbabwe was at that time on the verge of an economic catastrophe on unprecedented proportions. But I think that's not what I'm going to focus on. I'm going to focus on CredSure, the company. It was one of the about 4 to 5 credit insurance companies, specialist credit insurance companies that you've got on the continent. 2 of those, by far the largest, are in South Africa. You've got a couple in North Africa, and across the whole of sub-Saharan Africa at that point in time, Credit Sure didn't have any peers. I think we didn't have any credit insurance entities at that time. The company was a pillar of strength. It was a model of good governance. For its history, it had, most of its history, in fact, it had a virtual monopoly in the Zimbabwean market, particularly in the export niche and the political risk niche. Its client base was stellar. It included blue chip manufacturing, wholesaling, mining, exporting entities. It had massive global connections across the whole globe, and it was a member of the Bern Union, and I think some of you would know of the Bern Union. It is an international trade association that groups, at that time it was about 80 global members in the global export credit and investment insurance space. The company had a long history of sector-topping performance. Out of interest, maybe on the insurance side, I think for a number of years we had claims incurred ratio of about 11%. So it was a highly profitable entity. What I'll focus on is what made it really work. I think the first thing was the company had the right pedigree. And what I mean by pedigree, it was the shareholder base. And I think those of you in the know would realize the extent to which the company had that strength. When I roll out the shareholder panel, you had Munich Re, who are the largest reinsurers in the world, as one of the shareholders. Swiss Re, the number 2, were shareholders in the company. You had Hanover Re, you had Barclays Bank, you had Standard Bank, you had Standard Chartered Bank, you had Bank ABC, you had Stanbic Bank, you had Royal Mutual Insurance, you had ZB Financial Holdings, Credit Guarantee of South Africa, all of those being shareholders in that company. And that underlines the extent to which it had a fairly solid shareholder base, very high pedigree indeed. These entities, besides having really deep pockets, had the right connections, networks, they had the right partnerships and alliances that we're able to bring to the table of the company. The other key factor was governance. The shareholders were committed to the highest standards. They appointed key executives to the company's board of directors. And I will mention names like, luminaries like Albert Nduna at one point was on the board of the company. Simon, were you on the board at one point? Luminaries like Simon here were on the board of the company. Ralph Watungwa, now current CEO of Standard Chartered, was on the board. You had Francis Zanya at one point. All of you would remember Francis Zanya for the good thing he did at Bank ABC. We had Munyaradzi Kereke, who ended up being advisor to the central bank governor, who was on the board at one point. Charity Jinya, I think she's currently CEO of Nedbank Zimbabwe. She was on the board. You had Mike Truter from Credit Guarantee of South Africa. He was on the board. So you can tell, that governance was a key factor in terms of, just by looking at that board representation. You had experienced management. CEOs, I think the time I went on the board, you had a highly experienced man called Brian Hillen-Moore and his predecessor. These were seasoned operators in the credit insurance space. They were also supported by a fairly strong and diverse talent base. Sadly, in the year I was appointed to the board of Credit Sure, the bottom had started falling out of the Zimbabwean economy. Inflation in that year hit 600%. GDP fell 13.2% in that year. We were in the 5th straight year of economic decline as Zimbabwe. And we had declined in 5 years by 35%, I think unprecedented in history at that time. By the time I left, and I think all of you would know, when I exited as board chairman of Credit Sure in 2010, things had gotten a lot worse and were on the way up again. But that's really not the key. The key is really what then happened when the economic fundamentals started collapsing. I remember in my second year or third year, I think, as board chairman, sitting before an audit exit meeting with Deloitte, bravely trying to defend the company's going concern status. We'd gotten into a fairly viable, vibrant company by the time we were in our third year thereafter. The company was in a fairly, in a precarious position because of the economic fundamentals. I learned quite a few lessons from my experience with Credit, and I think the more positive ones are that, for you to have strong institutions, you must have the right caliber of equity holders and stakeholders. There's no substitute for good governance in business. That you need capacity, you need capital, you need the right connections, right partnerships. These are a vital ingredient for success. That you need leadership, you need strong, experienced management, you need talent. I think all these factors do matter. From the attempts, our brave attempts to keep a trade credit insurance company going at that time, in a fairly, I think not fairly, but incredibly hostile environment, what I learned were a few poignant lessons. That irrational politics can and will derail trade and commerce. I think there is no two ways about it, right? That trade is a global issue, it's a global phenomenon. There is no nation that can exist or survive as an island. I also learned that even with the most tested business models and the most well-conceived and run entities, there is no business model that will, thrive in all seasons. Despite our internal strengths as Credit, we couldn't defy the extraneous fundamentals that we're faced with as a country. I also learned, because we tried to then diversify vigorously the brand into general insurance, that you can't get brand extension happen easily. The other factor that I learned, and I'm still learning, is that as Zimbabweans, we are a resilient people, we are adaptable, but ultimately we are not Superman. I think it's one thing that I did learn. And I also learned that, rebirth is a fairly complex, difficult thing. It demands a lot more than doggedness. I think you need sometimes miracles for rebirth as a country. These lessons are more relevant today in this hype of a new dispensation in Zimbabwe. I think these lessons are lessons that we still must keep in mind. Sub-Saharan Africa outside South Africa accounts for just 2% of global trade. Less than 1% of trade finance services, less than 3% of global credit insurance exposure. As mentioned, trade plays a vital role in facilitating the growth of economies, and trade credit insurance does oil trade. Virtually all African economies require sustained growth for us to bridge the gap between ourselves and developed economies. And Zimbabwe at this juncture, I think more than any other African country, requires it to reverse a generation-long decline spiral. But as we reconnect with the global trade community, as we begin the reconstruction process, hopefully, there will be scope for massive growth. And I must congratulate Stan and his team for identifying that reality. However, there is incomplete trade insurance coverage and capacity in Africa. Major importers and maybe commodity exporters have it, but the majority don't. They are underserviced. We do not have local credit insurance entities across the whole of sub-Saharan Africa. And continental we are in 6 locations in Africa, except for Tunisia. We do not, and Kenya, Nairobi, we do not have any other environment in which we've got a vibrant local trade credit insurance entity. So the two key challenges that I see arising from deliberations today is how to develop both regional and local credit insurance capacity within Africa, and how to attract international underwriters into the African continent. Suvik, my colleague from Continental Re, who has worked for ATI, Africa Trade Insurance Agency, will probably refer to regional capacity. Is a lot more informed about what is happening in terms of that and ATI activities. However, today we are gathered to reinforce and give impetus to the developing initiative by Zimnat in the credit and guarantees insurance space. I trust that the lessons that I learned, the lessons that I've tried to articulate, will be able to assist us and serve us in our deliberations. As we seek to rebuild our trade credit insurance segment in Zimbabwe, I really would want us not to ignore the following factors. That, you need deep networks, you need institutional affiliations, you need vertical channel relationships, you need collaborations. I think these are all important. We must bear in mind that the Zimbabwe is open for business mantra translates into the entry of global players in this market. I think we are liberalizing. We will be liberalizing, hopefully. We are years behind as Zimbabwe. I think we have quite anachronistic methods and systems. We've got to adapt quickly. Otherwise, the global players will have us for breakfast. The increasingly borderless world that we live in really abhors, we have learned that. It abhors small entities. And the scale that you require to be competitive in the globalized environment can only be achieved through aggregation that you only get out of partnerships and alliances. I think it's something that we must bear in mind. The other factor that we must bear in mind is that the local advantage arising primarily from information asymmetry that you have is no longer, that you had in the past, is no longer there, I think, in this interconnected world. Despite the fact that we might have deep local knowledge and insights, we've got to complement that with global capacity and capabilities. And I'm glad that Zimnat have got the association with Santam. These entities from South Africa have global. They've got world-class capabilities, and I think they would serve well as partners, or they will serve Zimnat well as partners. The other key thing that I've learned in my travels, in my interaction across the continent, is that scenarios shift with amazing speed in Africa. We have to be agile and adaptable. Things change fast on the continent. In ending, it would be inappropriate for me not to probably delve into the political space in this country, because I think the status quo and our prospects in whatever initiatives that we are talking about today is very, the prospects are very closely tied to our political status quo. And I must highlight the role that all of us sitting in this room have representing the, business community constituency. Democracy is not a spectator sport. It can be dirty, it can be dangerous, it can be frustrating. But I think our history of the last 20 years has taught us that really we must participate. Perhaps more than anything else is the tyranny of indifference that we've had from people like you and me sitting in this room. The indifference of good men that has allowed irrational politics to prevail and be celebrated for so long in this country. I think this bold initiative that's being taken by Zimnat suggests that they are quite optimistic about the outcomes of the political process that looms between us and the successful unfurling of the new dispensation. They are optimistic. I know Zimnat, I know Masawara very closely. They've always been an optimistic enterprise. But as citizens, as stockholders of brand Zimbabwe, I think we owe them, we owe such enterprises the opportunity to flourish that has been deferred in our period of decline. And I think we have got to be actively engaged for us to assist such enterprises and for us to be, I think, really midwives in the transformation that this country really deserves. More than 11 years ago, I still recall one senior executive was addressing an insurance institute conference in Nyanga. He highlighted that we must be actively involved, that we must participate in political discourse and activities, that rather than moan about governance, we must be sitting at the table. I think his words were a powerful cliche. If you are not at the table, then you are on the menu. Sadly, we didn't listen. Thank you very much.